I wanted to discuss a topic that somebody just recently brought up in a Facebook group that I'm a part of. And so this person owns a business that they're serving clients, kind of a therapy, medical type business. And the question was, help me. I'm tracking my KPIs, I'm tracking my profit, and it has been consistently at a certain level when it was just me, and then I hired someone and now my profits are lower. So should I let go of this person? What should I do? If my profits going down, isn't that a sign that the business is not doing what it should be doing? So I have a lot of thoughts around this, so I thought I would just share and kind of show what I've seen from a CFO perspective, and especially around growth. So kind of as we start to talk about growing, the financial side of the business really starts to change a lot. So when you go from being a solopreneur and you are the only person, especially in a service-based business, when you're the only person serving your clients, that basically means that all the revenue is coming in, and then somehow you're paying for yourself. Either you're an S-Corp and you're paying yourself a salary, or maybe you're paying yourself out of profits. But basically you have your revenue coming in, and then all the expenses associated with just operating the business. You know, any business development you need to do, any software that you use for your clients, basically just anything that, you need to have to run the business, your insurance and blah, blah, blah. So that means that that's when you're a solopreneur. Now, as you start to scale, and if you want to scale up and if you want to grow, what happens is that you have to hire other people. So then all of a sudden you have either contractor expense or employee expense on your P&L. So you're either paying somebody as a contractor, they say I want $40 an hour, you pay them $40 an hour or whatever you negotiate, and that's just a flat rate on your that you have to pay them every month. Or you have an employee, and then you have their hourly rate or their salary plus whatever taxes you have to pay, and then plus any employee benefits or anything you may offer. So what happens is that you now have this extra dynamic of a fixed expense or some sort of variable expense, depending on if you're paying hourly or salary, that you didn't have before. And if you're only looking at profit in kind of a siloed view, like if you're just saying, oh, I'm tracking my profit and this is a KPI I want to track and it needs to stay at a certain number. What that's not taking into consideration is all the other factors that are happening in your business when you start to take on employees. Almost always, when you start to take on employees, your profit will go down. On some occasions, you will hire in people and then immediately be able to take on new business that will compensate for the fact that now you have higher expenses. But for most of us who are trying to scale a service-based business, what happens is that we have a certain client load, and if we hire someone in to help, it doesn't necessarily mean that revenue goes up in proportion, right? So what you're doing is you're just layering in another layer of expenses. And if you were working less in your business and someone else is taking on that role, you are essentially becoming overhead. Your salary or your owner's draw or whatever it is that you or however you're paying yourself, if you're not actually serving the clients, you are overhead as management. So what that means is that you're essentially a non-revenue generating piece. If whoever you're hiring in is generating the revenue, they're doing the work. So it's very, very, very common for, as you grow, your revenue will either stay the same or go up. It should start going up because you wouldn't hire people if you didn't see a growth trajectory. But your revenue will start to go, but your profit may actually go down for a while. Now, over time, those should go up together. You should be able to see more profit over time, but definitely right away, you're going to see a dip in profits. And then you may see a dip in profits depending on the business for a longer period of time. You have to train the employee. You have to, pay all their initial expenses. You might have to buy them a computer. You might have to pay a starting bonus depending on what type of industry you're in. So you're definitely going to see a little bit of an increase in expenses. lower profits, and then over time, those employees should be able to help you increase revenue in the business. If they're a client serving type role. So I have one client who's an engineering firm, and they basically have said it takes about a year to a year and a half for someone to be effective enough that they're really profitable for the business. And a year to a year and a half, when you're paying somebody, anywhere from $80,000 to $120,000 a year. I mean, whatever their salary range is, where this, whatever's reasonable, that's a lot to just carry. And yes, those hours are billable and whatnot, but being really profitable is a different situation. So I think just the thing is to expect the fact that profit will probably go down. And then the bigger issue is to try to track the metrics that really matter. They're really mattering for the business. So if maybe during a stage of growth, profit is still monitored, but it may not be the key performance indicator that you want to look at. A key performance indicator might be how many hours you're spending as a business owner. It might be profit per customer, or it might be still average lifetime value, or it might be some other metric that becomes more important than just profit at the end of the day. So keep that in mind as you're trying to figure out which metrics to choose for which ones you really care about and which ones you're going to make decisions around, because you might make a decision that might not end up serving you well if you're only looking at a metric that is skewed because of lots of other factors. And the bigger thing with growth and hiring is really planning. So if you are in a situation of wanting to hire, or maybe you already have hired and you are trying to figure out what your next year is going to look like, or even what's a reasonable profit amount, the real big issue is making sure you're planning and that you have a projection, because you might be seeing a profit number and it might not even be what it should be to operate your business long term, or maybe it's way above what you thought. So then that points back to, the hire being a great decision, or maybe the profit is really lower and you have to tweak something else in your business. So you really want to make sure that you're comparing things that make sense. When you start to think about bringing someone on, make sure that that planning is happening ahead of time, whenever you can. If you can plan before you even hire somebody, that's the best case scenario. And I have a tool on my website that you can download. It's called the cost to hire worksheet. And you can actually put in exactly what the rate is going to be for this person. And you can put in your state taxes, and it calculates the federal taxes for you. And it gives you a really good idea of what an ongoing cost is going to be for a person. But then I combine that with a forecast so that you can see, okay, what if you hired somebody at this time? What would that look like? What if you hired somebody at this time? What would that look like? So you can play around with things like that. Or what if I paid them $5 more than what they wanted? Or what if I paid them $5 less than what they wanted? Typically you don't offer more than what they wanted, but sometimes that makes sense. So when you're playing around with the forecast, you can start to play with scenarios. And that's when the planning piece really becomes important, because what if you see that and you say, well, actually, in the best case scenario, our profit is only $5,000 a month with these scenarios that I place into the forecast. So then you at least know that if you're making $6,000 per month and you plan for $5,000, then actually you're doing better than you thought, which is a fantastic situation to be in. So really, it's kind of more about understanding the situation, making sure you're actually comparing apples to apples. You don't want to compare your profits, and you don't want to compare your where your business is now in a growing and scaling phase to where you were as a solopreneur, because it's just different. And you need to be able to give yourself grace and understand that there are reasons that your business is really different and not comparable. So this year, I have started to get more help. And so that means that my profits are not what they were last year when I was basically doing all of the work myself. And, but that brings different flexibility. That means I can focus on more high value activities. I can get more help with things that I am not as great at as other people are. There are people who are better at things like bookkeeping tasks than I am, so it makes more sense for me to outsource that to someone who's good at it. And then as this business grows and grows, there's going to be more and more people who can provide the CFO service as well. So what that means is that there's just going to be a bigger layer of employee costs and or contractor costs. And I think that's okay, because that's the growth trajectory and that's the way that I want to go. So I've got that planned into my forecast and what's what I want for this business. So I think it all comes back to, where do you really want to be? And then plan for that and measure yourself against where you want to be, and not necessarily where you have always been in the past. That's a good metric to look at, but it's not always the best and the most helpful. So yeah, I mean, those are just some thoughts. I thought I would share it. It came up in a group today, and I thought it was super helpful. So to just talk it out, because it's hard to just give a little text and really get into the nitty-gritty of it. So anyways, have a wonderful Friday, and I will talk to you guys later. Bye.